welcome to Business Today Television. I'm Siddharth Zarabi and with me my colleague Sakshi Batra. The stock markets are near their all-time highs. And on this special edition of Market Masters, we are going to speak to a very special guest, someone who has seen the Indian stock markets grow over his nearly 4-decade career and more. Please welcome Raamdeo Agrawal ji, the chairman and co-founder of Motilal Oswal Group, here on the channel Business Today Television at India Today Group. Mr. Agrawal, thank you very much for your time with us today. I want to begin with that first question that is on everyone's mind. What is your own reading of the market? The last 4 months have seen a sharp rally. Have valuations gone out of sync with fundamental realities, and where do you see the markets headed and the prices that we are seeing at the current levels?
Good afternoon. The issue is that the market levels will keep moving up and down depending on the earnings movement. So every 3 months we have upgraded in the earnings. So we start with the 810 rupees EPS for Nifty on 1st April, and now we'll end up at about say 150, 140 rupees per share. So like that, it will end up finally at 950, 960. So markets will also keep recognizing 5-6% in a quarter or maybe 10% in a quarter. Then it will correct by 2-3% in next quarter. Then again go up by. So that's a process market keeps doing. Move up to the new high, then correct for some time. They over move, like they will overextend itself on the upside. Then they'll correct. Then they might overcorrect, and then again from the bottom it will move. So if you see, that's how. So market is very erratic. It is very difficult to predict the short-term movement of the market. But if you look at 4-5 years, or 10 years, 20 years, 30 years, 40 years, the line looks absolutely straight. So much so that if you do, say, a 40 years straight line, you'll find as if there is no change, there is no corrections at all. But we have seen 40-50% correction also from the highs. So one has to be very careful with the markets, and nobody knows the market truly that what is going to happen. But experience tells me that if the corporate earnings are growing at about 15% or so, 15-20%, so there is no reason why eventually we should not make about 15-17% in the market year on year. In fact, market has done about 13-14% for last 40 years, 35-40 years. So I think the future is even brighter. But let's not be more optimistic. Let's stay with what has happened in 40 years for the next 40 years. So I think in the longer run, we are going to do more like 12-15% compounded from.
Absolutely, Mr. Agrawal, and equity markets are for the optimists. But the worry question right now in front of investors is that do you really feel exuberance in any of the pockets in the markets where you'd like investors to be wary of any bubble-like valuations developing so that one can be cautious at this point?
Right now, across the market or even particular segments, see what happens is many times the whole market is up in the flames. Like what we saw in 92, the whole market was nuts in the sense that the index went up by 7x in 20 months. From 700, Sensex went to 4200 in 19-20 months. If you go back, I don't think you would have seen that chart, but that's what we lived. So that was an extreme. I don't think anywhere in the world it would have happened. So that's what is one extreme. But so in 2000, it was all the way technology, the .com and technology, that there was a boom in that particular thing. In 2008, it was all about the financial services kind of thing or real estate companies. So this, and then just 2 years back, we saw boom in digital companies, and worldwide there was so much of boom. But this time around, we don't think, I don't see anywhere that level of exuberance in any sector or market as a whole. Market is buoyant. It's not a depressed market or cheap market. That's for sure. But I don't see, somewhere 50p, 60p, 100p, take whatever is there. So that kind of situation is not there right now. So I think market is broadly distributed. I would say reasonably priced and hopeful about the corporate earnings in next 12 months.
Raamdeo, since you spoke about the sort of historical, in a historical context, let me just add that as a financial journalist, when I started out, the Sensex was around 3,000. and the Nifty was in just 3-digit level. Given the fundamentals and a lot of reportage in the recent days about this being India's decade, India's growth story, what's your own view as far as the Sensex and Nifty are concerned? Where do you see them going over the short term to medium term, sir?
Short term, I have no clue. You have to ask the chartists. They might give you some idea. I have no idea what market will do. I mean, market can very comfortably go down without giving any reason by 10-15%. So, or it can go up by 10-15% on a sustained buying by FIs or something like that. So I have no idea where it is headed, but I'm comfortable wherever it is, and whatever can happen, I'm ready in the sense that 10% done. See, I'm always a fully bought guy, so I'm ready to see 20%, 30% correction, because the corrections are there for 1 year or so. Within 1 year's time, you again get back the price. So, and that's the price you pay for getting 14-15% return. So clearly, the, the market is poised to do well, and this is called India's. See, what happens is that in short term, a lot of these things look to be very exaggerated. But when you give a 5-10 years time, then you realize what has happened. Like look at the tech. The tech started in 2000. Y2K happened, and we saw the birth of TCS, Infosys, Wipro. I mean, they were small companies. I mean, even in 99, 2000, they were 1,000 crores turnover, 100, 200 crores profit, 300 crores profit. They become giant companies. 20 years out, 25 years out, they have become like 2 lakh crores turnover, 40,000 crores profit, 20,000 crores profit. So you got to give time, and that's in India. You have to give not only to time to a company, you have to also give time to the market itself. Today it is a $3 trillion market. In 10 years' time, you will see that this will become a $9-10 trillion market. The issue is that do we have that patience? The market is all about the patience. Do you have patience? I mean, you decide what you want to write, where you want to write, when you want to write, but have patience. And that is what is missing. I mean, look at the option value, look at the futures value. People want to make money tomorrow, not even tomorrow. People want to make money next half an hour. That's not the market. At least I am not from that school.
Absolutely. Mr. Agrawal, what would you advise investors to do at this point in time? We are seeing markets at near record highs. Is this the time to fully stay invested? Should one look at booking profits at all, looking at the sharp rally or the sprint in the last 4 months that we've seen?
See, people who are in the market, they need to take their calls on the stocks. If some stock has done very well, it has gone way beyond their own expectation, or they can find a much better bet somewhere else. So there's no harm in selling something and buying something else. But my suggestion would be that don't go out of the market. Stay in the market. But either you stay with your current investment or sell something and buy something else. But stay in the equity, stay in the market, because you don't know what is going to happen tomorrow or day after. And while you are sleeping, market might go up by 2%, 5%. You will never be able to recover that. Also, market can go down by also 2-3%, 5%, which cannot be repaired. But it is impossible to time the market. Buy now and then sell now, again buy at lower levels, then again sell at top, then again buy. It's impossible. So at least I can't do it, and hence I don't even try to do that.
Raamdeo ji, I just wanted to pick up on what you told our viewers just in the previous answer. You spoke about how Y2K led to the birth of certain kind of companies, and subsequently we have seen at different events a new set of companies coming and ultimately becoming great creators of wealth. In the current technology-led sort of situation that we are in, where do you see new future multi-billion dollars companies being created out of India? Will it be AI? Will it be semiconductors or something else?
See, there are a lot of things happening. In fact, good thing is that in India, a lot of mega trends are there. One is, say, of course, technology-based mega trends. All the digital companies are coming up. In fact, few digital companies got listed at the end of the digital boom last year, or year before, actually. Zomato, Policy Bazaar, Paytm, few of these companies, they got listed. And then there was a bust. But lots of companies, lot of unicorns based on internet, they are unlisted right now. They are going to come one by one. As these companies they recover, they show path to profits or actually declare profits. I think people will understand the potential of current loss-making companies finally making a lot of money because they have done it in China, they have done it in America, they have done it in various parts of the world. So obviously, internet will not be just a fancy talk. It will become real channel of making money and delivering to the people at large all over the country simultaneously. So potential of internet will be realized at some point of time in next 5, 10, 15 years, and how it will be visible, how big it will be for individual companies, only time will tell. But I know one thing: there's an exponential technology. I have seen in stock market with the technology and telecom and DMAT. We used to do 200 crores per day turnover in BSE in 87. Today it is 200 lakh crores per annum. It's 1 lakh time expansion in 35 years. So this is possible only with technology. And so I think internet is very powerful. Some of the models will be exponential, and you'll see birth of the banks, particularly in financial services. You'll find a lot of financial services companies. They'll be extremely innovative, and they will mint money. So that is one, internet based. Then you have the recent reforms which happened in RERA. So all the real estate companies. Earlier there is thousands and thousands of real estate companies, and nobody bothered about the customer, what is happening. But now with the advent of RERA, there is a rebirth of some of the companies which were there. So, and it is the largest business in the world, the real estate business. But there are challenges of this business in terms of acquisition of land, execution, permits, permissions, and then but then from there also, I think there'll be emergence of some very large companies going forward as we go forward. Then you look at the insurance policies, health insurance, which is hardly 2-3% penetrated right now. Government's intention is to take entire 80, 90, 100% of the people under health policy fold. So you'll get to see again the power of penetration and power of digital technology. I mean, all will come together to give you an exponential growth in next 10, 15 years. So there are a lot of businesses like this. You have to go one by one and figure out which company, which industry is going to, because India itself is going to grow at 7%, 6.5%, 7%. And growth itself will pick up, let me tell you, because government is doing reforms one by one, one by one. So reforms are cumulative in character. What is done, you don't look back. So like the stock market trading has become dematted. Now don't go back to the physical forms of trading. So the reforms are cumulative in character, and that will accelerate the growth of India and hence the growth of some of the companies underlying.
Absolutely. Mr. Agrawal, what we've done very interestingly is also requested for a lot of questions from viewers all across our social media platforms, and tons and tons of questions came in. We couldn't, because of the paucity of time, we can't take all of them, but we've shortlisted a few of them and we'll start taking one by one as well. So let's take the first viewer question that we have for you. This is come from Preeti Tyagi from Muzaffarnagar, and she wants to know from you, how can retail investors identify potential multi-bagger stocks and also differentiate them from the speculative ones? What would you say to her?
That's a good question, actually. The difference between speculative stocks and multi-baggers. See, multi-bagger also you have to define what is multi-bagger as per you. If you want 10x in 5 years, then you have to go for speculative ones. But if you are talking about 10x in 10 years, I mean, for me, 10x in 10 years is a damn good multi-bagger. That's about 25% compounded. Now, to get 25% compounded, you have to look for the companies which are going to grow the earnings at 25%. Once you have got that, broadly, you will definitely get if your earnings call on the company for whatever reason is right, you will definitely get a stock which will do either 23% or it will do 28%. Because there will be re-rating and de-rating kind of situation. So, and if you are conservative in buying price, in that case, methodology, if you go about doing it, I think that's how the portfolio approach works. Out of 10, you'll get 4-5 rights, and 4-5 will be just mediocre. And on an average, you'll make that that 24-25% compounded. So that's how you go about doing it. But you have to do your research. You have to figure out, focus on the earnings of the companies, and you go where you understand the company and company's business, and then it's a matter of doing your spreadsheet, Excel sheet on those companies.
Well, Preeti, you got your answer on that, words of wisdom from Raamdeo Agrawal. The next question that we have is from Greater Noida, Anavi Oberoi, and her question is this the right time to accumulate information technology stocks? And she further adds, is the bottom in place?
Who knows? I don't know. I mean, these businesses have, I mean, IT is a foundation of Indian entrepreneurship, Indian story. India's story starts with the IT, and I think there's a lot to happen. But which company will be able to harness the power of AI? And I mean, it will be able to see next frontier is going to be definitely driven by innovations in AI and the client projects which are going to come from AI side. That is going to be a differentiator for a lot of services companies. Because one of the things about Indian IT is that they have been relevant in every wave of technology change, whether it is ERP, whether it is .com, whether it is now digital. I think they have been very relevant. So I'm quite sure when the AI comes in full bloom in next 2, 3, 4 years, the Indian services companies are the companies which are going to be darling of all the corporates all over the world. So I think it could turn out to be a fantastic time. But I don't know, we are too early on the game, and which ones to bet on. So these are the things which we need more research. I can't say anything about this right now, but they are extremely well positioned for this opportunity. You must have some allocations out there.
Okay, I hope Navi you got your answer there. The next question is from Ghaziabad, and Sakshi Swami has asked this question. She wants to know from you, when markets are at record high levels, should I invest in large cap stocks, or can mid and small caps give me better returns?
I think focus on whatever you understand. If your dad is working in a large cap company, better invest in large cap. If you understand small caps, typically individual investor who are starting up, their understanding of very large companies are very limited, but small companies you can understand very deeply and clearly. So you focus on wherever you understand. So opportunities or understanding can come in any shape and size. So don't restrict yourself to the size. If you understand something is going to grow at very rapid pace, say some telecom company which is very large, but if it's going to grow at 25%, 30% compounded, there's no harm in buying that company.
Sakshi, the answer from Raamdev ji is जो समझ में आए वही करिए और समझने के लिए थोड़ा रिसर्च भी करिए. रामदेव जी, अगला सवाल आर्या मेहर ने जमशेदपुर से ये सवाल भेजा है और सवाल ये है कि कैन वी इन्वेस्ट नाउ व्हेन द निफ्टी इज नियर 20,000 और हैव वी मिस्ड द बस? फोमो, द फेयर ऑफ मिसिंग आउट. रामदेव जी, प्रश्न ये है, सवाल ये है.
मेरी क्वेश्चन सही है. This, please understand, it is not all-time high for next 5 years. It is all-time high for last 75 years. The all-time high of next 5 years will be at least double of this. Are you getting what I'm saying?
Absolutely, absolutely.
And if you make it next 10 years, then all-time high will be 3x of this. So ये आपको faith होना बहुत जरूरी है कि भाई, when you say all-time high, it is for the last 5, 10, 20 years, 30 years. It is not for next 25. Like GDP, today it is 3 trillion. It is all-time high. Every day it is new high. That doesn't mean that it will not go to 4 trillion, 5 trillion, 7 trillion. And then we are talking about maybe 40, 45 trillion in 2047. So, let's be, this all-time high is a very, I don't know how to, it has to be taken away from the dictionary.
No, it's a very good point, Raamdev ji, that you explain that the best opportune time is when you can afford entry into any asset class. I think that's a very good answer. Another question, Sakshi, that we have.
Okay, so the next question we have is from Pawan Kumar from Jaipur, and he wants to know from you, do you see a strong bull run ahead of general elections 2024?
Bull run is already on. What is called bull run here? I mean, from 7,000, 8,000 index, post-COVID on sometime in March or February 2020, you are up to almost 3x, 2.5x. इससे ज़्यादा क्या चाहिए आपको? ये तो इंडेक्स लेवल है. कंपनी लेवल पे तो I don't know what has happened. So we are already in bull run. Can it become very ferocious? I mean, let's not be more greedy, and let's not, let's hope that market keeps growing at about 12-13% at index level, and then pick and choose your own, horses on which you want to bet.
That's a good point, Raamdev ji. Lalach buri bala hai. That's what you are saying. We have several other questions from viewers, but I want to take another one that is related to what we have been discussing. And this is a question, in fact, which everyone really asks. How does one create alpha in a market that, like you very correctly said, is at a high as far as the past is concerned? What would you tell viewers, and are there any filters that you could suggest, sir, to keep in mind?
Filter of patience. The guys who have the highest patience will get the highest alpha. Believe me. I mean, of course, you have to ride the right horse, good companies, but you need amazing amount of patience. See, who are the guys who make money in the stock market? Actually, there was one research, Fidelity Mutual Fund globally. They said the best performing funds or best performing portfolio are the portfolios of the guys who are dead.
Okay.
Yeah, so the guys who had patience. So owners of the company, they have maximum patience because they have no choice but to stay with the company. If my company is not doing well, I have to work another 2 hours. Hold the stock. So finally, when the company wins, the biggest winner is the company's owner itself, because by that time all the disbelievers, they have left the company. So when you bet on, say, 10 companies, out of that 5 will definitely disappoint you, and the 5 winners, you have to bring the maximum patience, and that is what is lacking in the market today, and that is the biggest source of advantage for you.
Okay. Mr. Agrawal, we'll take another viewer question. This is from Hisar. Vikram Singh has sent this question and he wants to know from you, how many stocks should one have in an ideal portfolio, and what should be the ideal mix of the stocks that one should have in this?
You should not have too many babies in the portfolios, in the sense that you should have as many stocks as many you understand. Because if you buy something without understanding for the sake of diversification, it will kill you. Because you end up buying wrong things, and when the stock goes down, then you'll say, what do I do? So you should have your destiny under control. If you understand 5, 6 companies, 7, 8 companies, just put in that. That is a good level of diversification you should have. I mean, typically, the benefit of diversification don't go beyond 15 companies. उसके बाद का diversification को मतलब ही नहीं. I mean, that is statistically proven, but you should not hesitate to stay within circle of your competence and buy just about 4, 5 companies, 6 companies. You'll have a lot of fun. I can tell you this.
Good points there, and we'll do a follow up on that. But before that, Raamdev ji, there's another question. Lalit Goel from Modi Nagar. And this question is quite relevant considering the recent data that was released by the regulator about what happens to certain class of day traders. The question is trading a better strategy to create more wealth in the short term versus investing over the long term?
Yeah, I've done it by investing in the long run, so I can't guide you on anything else. But in market, if there are 10 million guys, there are 10 million ways of making money. Nothing is right, nothing is wrong. The strategy which is working for you is the best strategy. Because whatever strategy you have, whether it is short term, medium term, long term, trading come investing, hybrid, it all depends on how well you are doing and how much fun you are having in investing. So market is a place where all types of people come. What is most important is you should be winning. There is, वो जैसे बोलते हैं गंगा में जितना पानी नहीं उतना यहाँ पैसा है. So you should be getting your bucket of water.
Absolutely. Mr. Agrawal, a related question to this and the one that you answered previously also, I wanted to understand where you said that, you understand the companies, have 15 companies in your portfolio and that would be ideal. What would you really tell, or how would you deal with momentum plays here? There have been several sectoral rotations that we've been seeing all first half of this calendar year as well. So how do you really deal with that as a fund manager? And or do you say that, I avoid the noise, I just stick to my 25 companies and I want to focus on that despite all the noise?
When momentum is touching your portfolios, you feel very nice. But if it is bypassing you, you feel a little bad. But that's fine because you can't be everywhere. Say coal prices going up, I'm not in the coal. So I'm reconciled to seeing some stocks flying, but I'm not participating. So you can't be part of every momentum. You only hope that what you have bought gets the momentum at some point of time.
Okay, let's come back to our questions. We have 2-3 more that we had shortlisted from the ones that were sent, and viewers, we will continue to take your feedback as the show goes along. Dev Sethia from Nagpur, the city of oranges, has sent a question. What is the impact of the gift city going to be, and what opportunities does it offer? Sakshi, I think this is a question to do with the trading that is happening at the gift city, perhaps, Raamdeo.
Right now, it's all about the institutions, all the global institutions participating out of Gift City, what they were doing out of Singapore. I think Singapore, SGX and NSE both have come together and put up this platform. So I think it is more institutional right now. But what opportunities come for retail in India, I think with your LRS money, I think you can do some of that stuff. But I'm fully not informed on that. What are the opportunities for the retail guys? We have to see. We have an office out there, but let's see how exactly we can. This will be opportune. This is almost a offshore center, but since we have a capital controls at individual level, how exactly one can take benefit of this particular platform. But it is a nifty trading. You can as well do from India. So I don't see any specific advantage for somebody who's in India, Indian citizen, Indian money, for them to cross the border and go to Ahmedabad in IFC.
Okay. A related question to that again, we've got from Jaunpur. Ashish Dubey has sent this question and he wants to know from you, should one really look at becoming a full-time trader or see trading as a serious career option?
I have no idea for this. In the sense that, see, if you are very passionate and you are good at what you are doing, and you can try your the markets will become bigger, deeper, more faster, and more challenging as we go by. So you have to find your own strategy. Don't confuse the bull market with your brains. That is very important, because it could be in this last 2 years, 3 years rally, you might have made some money, but quite possible when serious corrections come, you get wiped out. So you see for yourself whether you have something sustainable, you have sustainable advantage in doing trading, and if you are good at that and you are minting money day in day out, whether the market is up or down, then that's the career you should have, because then you don't have to ask anybody. You are financially, ultimately the power of market is that you become financially independent. So you don't have to ask anybody if you are making good amount of money. And I would advise that if you are making good amount of money in trading, please keep apportioning part of your winnings in a high quality investment, so that you will have some terminal value which will not be out of trading, but that will be out of investment.
Absolutely, take the cream out of the trading, if we may call it that. One more question before we get on with it. Riya Sharma from Uttarakhand, and her question, Raamdeo ji, is how does one determine the right time to buy, sell and hold in order to achieve the best returns?
So this timing part is, when you hit the story, since you are a retail investor, when you study the company, I mean, I know in last 40 years I've come across many stories in top of the market because the stories come not knowing what is the level of the market. You're doing your research, you come across a company and the company looks attractive at that point of time. Don't bother about the market. If the company looks attractive at that price at which which is quoted today, you go and do the stuff, you buy the stock and wait. Quite possible that if the market goes down or even without market going down, your stock may correct. I mean, you buy at 100, it might go to 80, 90. So that should not shake your conviction on the company's story or company's future. And so don't confuse what is happening in broader market with the what is the value being offered by the company which you have researched. In top of the market, you can get the cheapest company. In bottom of the market, you might find the most expensive company. So it all depends on how good is your research.
I hope that answers your question too, Ria. And now we'll get back to our own questions for you, sir. Understanding a little bit more from the perspective of, the fund flows that are coming into the Indian markets. They have picked up pace over the last 3-4 months or so after the kind of FOMO we have seen in the FII community. But I want to understand from you, because you speak to dozens of FIIs on an everyday basis. What is the idea they are sharing with you about India and the Indian stock markets?
They are sharing. I mean, I had a call 2 days back with one very senior, I mean, maybe as old as me, into Hong Kong and doing global fund. So he was saying something which very conservative guy. I've never heard the kind of bullishness he has on FI's filling in last 20, 30 years. I've been talking almost every 6 months with him. So he's saying that, no, in fact, my head of research was on tour. He said he met 40 FIs in Hong Kong, Singapore. All 40 of them are bullish on India. All 40 of them. And they are actually bearish on China's allocation. And China's allocation is 30%. Our allocation is about 14, 15% in emerging market. So if some of the guys were saying that they're not putting 30%, forget about 30%, they're not putting even 10% incrementally in China. And people want to take out money from China. So where exactly it will go? So I think even 4-5% shift in India allocation in the global scheme of things. See, if you see the large economies, apart from US, where it is a bet for innovation, I mean, all the technology companies are coming from US. So that is one place where there is an innovation and large size of country and massive mother of all the consumer markets. So that is there. Apart from that, if you want to buy into emerging markets, something is stable, predictable, and growing, and people have made tons of money in the past with some kind of credential, it is only India. So if you don't buy in US, have to have some portion of your allocations in India. So I would think that, of course, that cannot come without your earning support or what's happening in the economy. So I think if you have a fair performance on the economy, say 6 to 7% kind of growth, I think there will be no dearth of FI buying. And in any case, in last 20, 25 years, somebody was telling me only in 4 years they have been net seller. Otherwise, every year they have been buyer. And I mean, one of the biggest year in which they have sold is the last year or so. So now their turn is for next 4-5 years to buy in. Now, how big they'll buy in? Because there's not one guy. There are many guys, and they come in different. Once our corporate performance is good, you are guaranteed to get their flow, and it will be much bigger than whatever you're thinking. So we have to do our job. That is corporate performance. If corporate performance is there, I have no doubts current multiple is good enough, and it is not very, what I would say, unattractive or very high for which they may not come. It's not that. We have the best of the banking sector right now, very cleaned up, growing very rapidly. Credit growth is upwards of 13, 14%, 15%. Your corporates are completely deleveraged. Your consumer confidence is very high. Consumer loans are growing at 17%. So I think markets are at about 20-21 P multiple. We have everything. It's a picture perfect kind of situation. I mean, something can go wrong in the sense that oil price can go to 120, something can happen in an atomic scenario. So yes, there will be things which will surprise us on downside. But longer term, the story is pretty intact.
Absolutely. Raamdeo ji, आपने कहा picture is perfect. My next question is that, and this is actually a question that has been sent by a colleague from the newsroom because he wants to know, picture अभी बाकी है. His question is, अब पैसा कहाँ बनेगा और वैल्यू कहाँ से मिलेगा? His and he further adds, PSU banks क्या नए ब्लू चिप्स हैं या कोई और सेक्टर या थीम आप समझते हैं हमें उस पे बेट लगाना चाहिए?
देखिए, इंडिया बहुत फर्टाइल जगह है, यहाँ सब तरह का क्रॉप होगा, गेहूं भी बनेगा, चावल भी बनेगा, मिलेट्स भी बनेंगे, मतलब इट्स रियली डाइवर्सिफाइड कंट्री आई एम। You will get companies from banks, you will get from PSUs, you will get from defense, you will get from real estate, you will get from digital, you will get from technology. I mean, you see your own research, you do your research. I mean, how many companies have grown at 25% last 5 years? You'll get to see, I mean, from where all it is coming. You know, so it will be very diversified because as the recovery in the economy is very widespread and it's gaining momentum. So I would think that it's a market which is going to the winner. And frankly speaking, if you don't know too much about the stocks, it is better to buy a passive fund, an index fund, Nifty fund, or S&P 500 fund, and just be allocated. I think you'll beat a lot of people in your city. If there are 1,000 guys coming from your city, you buy index fund and go and do your job. Otherwise, like you're a doctor or professor, whatever, you will end up doing much better than most of them. I would say in 1,000, you'll be somewhere in 980 or 980 guys will be below you. So that's the kind of situation. But the excitement of the market is so high that people don't do what is most commonsensical, but they try to do funny things.
No, those are very important words of advice. One quick follow-up, Raamdeo ji, because you spoke about research several times during our conversation today. And the question that I feel is, there is a plethora of social media and sometimes it doesn't deliver the optimal results. Anybody starts giving advice, unregulated people. For the regulator also, when we talk to them, they say we cannot control everything. In such a scenario where there is also too much information and within that lot of misinformation, how would you guide the newcomer to the market when it comes to research?
How difficult they are. Like, I mean, earlier, this handling the noise. See, the biggest problem is that when the guy is young, he doesn't know anything. Like, I can think about way back in 80s and 90s, you had very limited resources. I mean, getting balance sheet was tough. So being
Exactly.
accountant, the only research report available was the balance sheet. So you were reading the balance sheet and trying to understand the company. At best, you could go and meet him or something like that. That was a limited thing, and there was no second thing. Even research reports were not there. अभी आपको 50-60 एनालिस्ट हैं एक कंपनी के ऊपर, कोई 30 लोग तेजी बोलते हैं, 30 लोग मंदी बोलते हैं. द फैक्ट्स आर सेम. देन उसके बाद सोशल मीडिया है, फिर इन्फ्लुएंसर्स हैं, फिर इतने सारे चैनल्स हैं. वो उस बंदे को समझ में आता है किसको फॉलो करे. तो आई थिंक cutting the noise is the biggest challenge, and going back to understanding the businesses. See, Buffett's biggest thing is that you start reading about Buffett and all, who actually propagated, whether it is Phil Fisher's book or Benjamin Graham or Warren Buffett. The first thing is you must understand the business. First thing is to understand the business. So you got to use your common sense and don't get carried away by too much of noise. And I think the biggest thing is the greed. The greed to make quick money in the market. That is what is the promise of most of the guys who are there in the channel influence. And don't be carried away by that. To make money higher than 15% in the market, the amount of intelligence and luck you need is extraordinary.
Absolutely.
I mean, across the portfolio, I'm saying one stock here and there, but as a portfolio, if you have diversified portfolio of 1 crore rupees, it is very tough on a 3-year or 5-year basis to make more than 15%. The creation of alpha requires disproportionately large amount of intelligence and piece of luck. That must get into the head of the people. And in the process, trying to get alpha or whatever, they end up buying unlisted companies, some useless company, some penny stock. And then finally, when the market comes down, then they come and show the portfolio. They're saying, sir, ये तो सब खराब कंपनी यहाँ पास में आ गया. And then finally at the bottom they go and sell. And then they never come back. Again they'll come at the top. So, buy at top and sell at bottom. That's what keeps happening. So you have to bring little, and you'll find the guys. Even in smallest places, you'll find some professor, some old man who has done well. I can't believe that in any city or any kasbah, there is not one or two wise guys. More wise guys than guys in Mumbai, I can tell you this. And
That
you
is
have to to them. You have to find them and just follow them. I found the one wise guy in '94. That was Warren Buffett, and that has helped me all.
You are quoting Mr. Warren Buffett. We would like to quote you because you always say buy right and sit tight. That's the message that you always give to all the viewers. But what happens when there is so much of external factor at play? We've been all through this last 1 year looking at how central banks across the world are moving in terms of the rates. What will that do to the Indian markets as well? So what role does all of this play? Should one keep monitoring that when one is purely investing in the stock markets, believing on good companies, fundamentals? What role does all of this external factor really play there?
Yeah, so these are very important. I mean, like what happens? See, the whole world is a big village, so everything is interconnected. Everybody is interdependent. I mean, we are dependent on Ukraine. Ukraine is dependent on us. Russia is dependent on China. China is dependent on America. So everybody is interconnected. Now, I mean, days are over when you can say that, okay, I will not trade with you, I will not talk to you. Those are over. I mean, the politicians are realizing that it cannot be segregated. It's an interdependent world. So now, everybody is important, whatever happens anywhere. The issue is what is important, what is unimportant. For a stock, now you come to a company and figure out what is important, what is unimportant. What is knowable, what is not knowable. So what is unimportant, don't bother about them. Okay. Now, there are two parts of important, knowable and not knowable. We spend 90% time in important but not knowable. अभी करें क्या यार, मतलब where the hell interest rate is headed, even Powell himself doesn't know, so who the hell I am. So I would not bother about something important but not knowable. What is knowable, if at all, is how good is the management, how good is the business, what is going to happen in the next 2-3 years for this company. I mean, what is going to happen to the competition in these 2-3 companies? Are they benefited by some, reforms or some global trend? Like that, I would like to be ahead of the curve in understanding the company. That is the effort. Do I know something what market doesn't know? And that puts me ahead of the curve in knowing the company's future. And if I hit upon something like that for my research or my common sense or my reading not the balance sheet, but some books or some article or something, I think that's where the advantage comes in investing.
Absolutely, Raamdeo ji, and all through this conversation that we have had today, there are multiple sort of bullet point advice that you have given us, which we will provide all the separate answers as separate videos on social media for our viewers to further digest. But जाते जाते एक आखिरी सवाल, it is a little repetitive, but वो एक lesson जो आपने अभी तक आज share नहीं किया in today's conversation that you would like to share with our viewers.
What is that?
One last lesson from you for our viewers, जाते जाते.
वही बोल रहा हूँ कि भाई देखिए, आपको बाजार में पैसे कमाने के अपॉर्चुनिटी बहुत बड़ा है, लेकिन यू नीड द विजन, यू नीड द करेज एंड यू नीड द पेशेंस. तो विजन शायद सबके पास अपने हिसाब से है. That's why you have come to the market. You have confidence. You can foresee something, because if you go around, you can see what's coming up in the city or township. So you have vision about some businesses. You also have courage to put your hard-earned savings into the market. But do you have enough patience? Indian market is so good. Even if you commit mistake, you will not lose money. That's the downside, I'm telling you. And then you have to have a little bit of luck to hit upon one or two good companies out of your portfolio. And that will take you through and through, I'm telling you. So, I mean, that's what has happened with me for the last 40 years. I've been lucky enough to get some good ideas on the way. And with the social media and all that, you should be able to figure out when you are listening to even television channel, whether it is your channel, CNBC or 18 Now, whatever you are listening to. All kinds of guys are coming and they are giving actually best of the advices. Leave aside the chartist. They are actually company guys are telling you. You got to understand. You got to listen to that, and you have a lot of time. Abhi nahi to raat ko suno aap. And then figure out, because now thanks to social media and this cheap television and digital media, that you are actually one-on-one with the management or with Warren Buffett or Bill Gates, whatever. You decide whom you want to listen and from whom you want to learn. And then after that, you got to make a choice. But got to bring the patience. I'm telling you, understand the power of patience in investing. Nothing is going to happen in 12 months or 6 months or 3 months. It is going to happen. You have to commit mistakes, enough mistakes, before you hit on the jackpot.
Absolutely. And for that jackpot, a lot of hard work, sincerity, patience is required. Raamdeo Agrawal ji, thank you very much for your time with us today on Market Masters live on Business Today television. We enjoyed this conversation and I'm sure our viewers have also. Thank you once again. With that, it's a wrap on today's episode. We'll be back with more Market Masters in the future. Till then, goodbye and we'll see you again very soon.